Now, 3M is a US company which manufactures and distributes a wide range of industrial products and solutions. Originally, the company started as a small mining venture, but is now grown to a manufacturer of over 60,000 3M products and is found in many homes. Recently, 3M announced both poor quarter four results and a weak outlook for 2023. Furthermore, 3M stated that it would be laying off 2,500 workers as the economic outlook became uncertain. Now, the majority of those workers would be leaving the manufacturing sector. However, 3M does have a long history of dividend growth and a long history of raising dividends year by year, so it could be an interesting company worth considering holding for the longer term. So, does this make 3M a good stock to buy ahead of some strong seasonals that it's approaching? Over the last 20 years, 3M has gained 85% of the time between the 2nd of February and the 3rd of April. The average return has been 3.37%, and the biggest loss was minus 13.79% here in 2020. Major trade risks. All risks have outlooks, and this is no exception. The major risk here, of course, if there is further bad news, bad earnings for 3M, or the economic outlook does deteriorate, generally speaking, for stocks. Remember, don't just trade it, but season exit.